Hi and welcome to our weekly report for the week starting Monday the 27th of January. We have a busy week ahead of us which starts with slow economic calendar on Monday. On Tuesday we should be on a lookout for US durable goods orders. Going forward, crude oil inventories and Fed interest rate decision and FOMC press conference will be closely watched on Wednesday. On Thursday, key data releases are Eurozone employment rate for December, Bank of England interest rate decision, and US preliminary Q4 GDP figures. The week will finish on Friday with Eurozone preliminary Q4 GDP figures and US Michigan consumer sentiment. Now, let's take a look at few markets. This is the daily chart for euro-dollar currency pair, which is quite nicely downtrending, and we are just below that key trading level that we mentioned last week at 110.60. Bears appear to be in control below that level because it represents this previous rising support trend line, and we have a cluster of moving averages at that level as well. Spot 11, 111.20, so 20, 50, 200 period moving averages at 111.50, which is this orange line here. Bears are in complete control below 110.60, potentially looking for an extension to the downside, initially targeting the cluster of these two previous lows, nice and round number at 110, below 110. Possibly 109.40, possibly even 109, which is the cluster of these lows from 30th of September. Alternatively, if we see a breakout and push higher and the end of day close above 111.50, that would negate the bearish outlook, potentially opening the way for an extension to the upside, targeting initially 112, 112.30, which is this high here from early January, possibly even 1.13. Cable energy is building here. This is our consolidation prior to the election, breakout and retest of that level now, and we are seeing another coiling price action here, all to do with the Bank of England indication that potentially the next rate decision could be softer, or therefore the rate cuts at some point in future initially caused sterling to weaken against the range of other currencies, and this particular occasion against the dollar. So we are looking at the key trading level at 129.30, this cluster of the lows here. If we see a dip lower and end of day close below that level, bears would be in complete control, targeting 128.36, which is our 200-day moving average, and also a cluster of these lows here. Possibly even 126 to the downside. Alternatively, if we see a further consolidation and a breakout and a spike higher and a bullish breakout above 132.20, the end of day close above that level and a retest of that level from above would be quite bullish, potentially opening the way for an extension to the upside towards 1.3550 resistance, possibly even 1.3840 over a longer period of time. Dollar Japanese yen is retesting a breakout level. We talked about the importance of this 109.50 area, which was a resistance in the past, and eventually it was broken. If we draw a trend line connecting the sequence of these lower highs and projected in the future, this would bring us to the current breakout level of 109.50, 109.30. So where to from now? Key trading level for the bulls is at 108.90. This orange line here, if we see a consolidation here and a breakout higher, that would potentially open the way for an extension to the upside, targeting 109.50, 110, 1020, possibly 111, 111.50 on the upside as logical resistances. Alternatively, if we dip lower and create the end of day close below 108.90, that would negate the bullish outlook, potentially opening the way for a deeper retracement to the downside and retest of these supports at 108.14, 107.60. Now let's talk about gold. We had a bullish reaction higher in gold. US equity or global equities were softer as a result of concerns with the virus outbreak in China. Gold was moving higher. Key trading level for us to watch is at 1560, cluster of these two moving averages and cluster of these lows. As long as the price stays above that level, bulls are in control, potentially looking for a breakout above this current swing highs at 1576 and targeting 1580, 1590, 16, possibly even 1611 on the upside. Alternatively, if we see a dip lower and end of day close below 1550, that would change the outlook and change it severely to a bearish outlook, potentially looking for an extension to the downside, therefore a deeper retracement and retest of additional supports at 1540 initially, followed by 1530, 1526. Lastly, let's talk about crude oil. Crude oil is under pressure. Yet again, supply and demand and fundamentals are coming in play. Key trading level for us to watch is at 56.78. Major resistance on the upside. As long as the price stays above that level, bears are in control, potentially looking for an extension to the downside towards 50 to 60, possibly even 50 as a nice and round number. Alternatively, if you see a breakout and end of day close above 56.80, that could cause an oversold bounce back, therefore a short squeeze higher towards 59.50, 60, possibly even 60.50 on the upside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.